former President Donald Trump sent shockwaves through the global trade system with a surprise announcement. He declared a 90-day suspension of new U.S. tariffs on imported goods. This move, effective immediately, aimed to ease pressure on businesses and consumers grappling with rising costs. Trump framed the decision as a way to stimulate economic activity and boost American competitiveness. However, this reprieve came with a major caveat: China was explicitly excluded. The 90-day pause offered a temporary truce in the escalating trade war. Businesses and consumers, weary from months of uncertainty, breathed a sigh of relief. Yet the exclusion of China, a key player in the global economy, cast a long shadow over the announcement. This move signaled that the trade war was far from over. China found itself on the outside looking in as Trump extended an olive branch to other trading partners. This exclusion was no accident. It reflected Trump's long-held grievances against China's trade practices. Trump had repeatedly accused China of unfair trade practices, intellectual property theft, and currency manipulation. The decision to maintain tariffs on Chinese goods was seen as a means of pressuring Beijing to make concessions. Trump's administration believed that maintaining pressure on China was crucial to securing a favorable trade deal. The exclusion of China from the tariff suspension underscored the deep divisions that remained between the two economic superpowers. The initial reaction in global markets to Trump's announcement was a mix of optimism and uncertainty. Stock markets, after weeks of volatility, surged on the news. The Dow Jones Industrial Average soared almost 3,000 points, reflecting renewed investor confidence. However, this initial euphoria was tempered by the realization that the trade war was far from over. The exclusion of China from the tariff suspension injected a dose of reality into the markets. Analysts noted that the ongoing trade dispute between the U.S. and China continued to pose a significant risk to global economic growth. The 90-day pause, while welcome, was seen as a temporary measure that did little to address the underlying trade tensions. Section 4. Winners and losers in the tariff tussle. The tariff suspension had the potential to create both winners and losers in the global economy. American consumers, long burdened by rising prices, stood to benefit from the pause in tariff hikes. Industries that relied heavily on imported goods, such as retail and manufacturing, also welcomed the reprieve. However, the exclusion of China tempered this enthusiasm. Chinese exporters, facing continued tariffs, found themselves at a disadvantage. The ongoing trade dispute threatened to disrupt global supply chains and dampen economic growth. The uncertainty surrounding the trade war made it difficult for businesses to plan for the future, hindering investment and job creation. Section 5. The long road ahead. Uncertainty remains. Trump's decision to suspend tariffs, while offering a glimmer of hope, did not signal an end to the trade war. The exclusion of China, a key player in the global economy, highlighted the deep divisions that remained. The 90-day pause bought some time, but the underlying trade tensions persisted. Businesses and consumers faced a future fraught with uncertainty. The trade war's ultimate impact on the global economy remained to be seen. The outcome hinged on whether the U.S. and China could find common ground and negotiate a lasting trade agreement. Until then, the global economy would continue to navigate the choppy waters of